I'll call to order the Santa Barbara City Council Finance Committee meeting for September 19th. And we have one item on the agenda, which is the fourth quarter financial review. Ms. Nemes?
Good afternoon, Chair Hart, Committee Member Waite. I am Julie Nemes, the Treasury Manager for the Finance Department, and I'm here today with Ms. Tomaszewski, and we are here today to present the fourth quarter financial review for fiscal year 2017. I did want to mention that these numbers are still preliminary. We're still closing the fiscal year. So today we will not be presenting the general fund reserve balances. So we'll be coming back in about a month to present the general fund reserve balances and more final balances for the fiscal year when more year-end financial results are ready and more year-end closing entries have been done. So the outline for today is that I will be presenting the significant variances as of June 30, 2017 for the general fund revenues. Ms. Tomaszewski will be presenting variances for the general fund expenditures as well as the enterprise funds. She will also be going into the proposed budget adjustments for fourth quarter. So moving on to general fund revenues. This first table is a summary of all of the revenues for fiscal year 2017. All of the tables are a comparison of the annual budget versus actuals for fiscal year 2017, as well as a comparison of actuals for the current year versus the prior year actuals. I did want to make one note that the numbers for taxes and other revenues are different from the interim financial statements in your attachment 1 in your report. We received some data after the interim financial statements were prepared, and so we updated the figures both in your council agenda packet for attachment 2 as well as in the PowerPoint. These primarily relate to sales and use tax and franchise fees, and I'll go into detail on the next couple slides as to what the accruals were that we updated. But in total, you'll see that taxes and fees and service charges both came in under budget for fiscal year 2017, taxes by about $700,000 and fees and service charges by $1.2 million. And other revenues actually exceeded budget by about $1.5 million. In total, we're looking at all revenues coming in under budget by about $400,000. We are aware of some additional accruals that are still pending that will lower this number by about $100,000 to $200,000. And those will still be posted in the next couple weeks as we close the year. I did want to point out that compared to prior year, total revenues did come in higher than prior year by about 4.5%. So now I'll go into some details for each of these categories. The first one being sales and taxes, total taxes. As I mentioned, they're coming in under budget for the year by about $713,000. And there's 4 variances that I wanted to focus on, mostly negative but one positive. The first one being sales and use tax. As I mentioned on the previous slide, we did post an adjustment to this number, and that was due to the fourth quarter number coming in the last week. We got the fourth quarter sales tax data for fiscal year 2017. It did come in down 2.7% compared to the prior year fourth quarter. So what I did was I went and I actually updated the actuals for fiscal year 17, and I also updated the prior year actuals to represent the fourth quarters for both years so we could do a comparison for year to year. So when you look at the fourth quarters for fiscal year 17 and compare it to the 4 quarters for the prior year, we're down 0.6% compared to the prior year, and that amounts to $1 million. And there are a lot of reasons why we think that sales and use tax is going down, why we're seeing this year-to-year decline. We're continuing to see low inflation. We've talked about it over the last year or 2 years. We're seeing this general shift to a more service-based economy. We're continuing to see an increase in online sales and that shift away from your brick and mortar sales. And so we think that that's continuing to impact our sales and use tax returns. And so the other thing we also saw in the fiscal year 2017 is we saw an impact from the closure of a couple of prominent businesses in the downtown corridor. So that also impacted our sales and use tax for the current year. Moving on to property tax, this has been one of our really healthy revenues for the city. Over the last couple of years, we've seen some significant growth in the property taxes, and the current year it actually exceeded budget by over $700,000, and that was due to increase in assessed values for per county records. It was over 6% this year, and we also saw some real increases in other lines such as supplemental taxes. Next is UUT. It really was pretty much in line with budget, but the reason I wanted to talk about it was that number compared to prior year. It's another one of those revenue sources that is just not seeing the growth we've seen in other years. It's down from prior year 2%. And we've been seeing over the last couple of years a real decline in the traditional landline and cellular usage in favor of prepaid cellular. We get some UUT from prepaid cellular, but not anything to replace what we lost in the traditional landline and traditional cellular. We're also seeing a real competition in the video programming market. We're seeing people move away from cable service to other video programming like streaming. And the last one I wanted to talk about was transit occupancy tax. It is down below budget by over $500,000. We did see a pretty healthy increase in hotel growth of over 5%. Where we saw the real impact was in the enforcement of short-term vacation rentals. We did budget for the enforcement, but we saw a quicker enforcement than we had predicted in the original budget, and that's why we see this impact in the current fiscal year. So that's a summary of tax revenues. Now I'm going to move on to the other revenues. Overall, other revenues came in actually over budget by over $1.4 million. And there's a few variances I wanted to talk about. The first one being fines and forfeitures, which actually came in below budget. And once again, this was due to parking citation revenues, largely due to vacancies as well as more timely payments. The next is franchise fees. And I mentioned this in the first slide that this was one that we updated based on more data that came in after we prepared the interim financial statements. For the last couple of years, we have collected the additional 1% electrical franchise fee, but we've put it in a separate account. We actually haven't recorded it as revenues. So after we prepared the interim financial statements, we did receive a favorable California Supreme Court decision in the Jacks versus City of Santa Barbara case. So we actually then went and recorded about $1.3 million to revenues in fiscal year 2017, and that's why we see a favorable variance. Originally, it was a slightly negative variance, largely due to the same issues that have affected UUT. Next, use of money and property. We saw overall an increase in interest income, but we saw a slight decrease in the general fund portion. We also saw an impact in rental income from some recreation facilities, and that's what's causing this decrease compared to budget. And lastly is intergovernmental. This is a pretty significant positive variance of about $1 million, and this again is due to what we've seen in prior years' mutual aid reimbursements. Moving on to general fund fees and service charges. This is a negative variance of over $1.1 million, and there's really only two variances that are creating this variance of $1.1 million. First one being community development of about $220,000. This really is due to just a moderate decline in general permitting activity. One project can really swing it either way. And the next is in public works of over $700,000. And there's a couple factors here. The first being a decline in engineering work order revenue, and that's due to staff vacancies. So we have a significant decline on the expenditure side. And another factor is a reclassification of Measure A staff revenue to the Measure A capital fund. And the last is unbillable in-kind general fund contribution to that Cliff Las Positas project. The last area I'm going to be covering is the miscellaneous revenues. We had a category of miscellaneous revenues on one of the first slides that was below budget of $380,000, and this is the breakdown of that category. There's really just two categories that make up this difference, one positive, one negative. The first one is miscellaneous. It actually has a positive variance, but I wanted to discuss it briefly because of that number. Compared to prior year, it's up 43%, and that's all due to a one-time $2.5 million Plains All-American settlement related to the Refugio oil spill. So we actually increased the budget and actuals, but it's a significant increase from the prior year, so I wanted to point it out. The next is operating transfers in. It was below budget, and that's really what caused the variance in this category of miscellaneous revenues. And more than half of this is due to transfers in from the Traffic Safety Fund, and that's due to a decline in moving traffic citations that are issued by the city and paid from the county. And this is really due to some vacancies in that program. So that sums up on my revenue overview, and I'm happy to answer any questions before I pass it on to Ms. Tomaszewski.
Are there any questions for Ms. Nemes? Councilmember Dominguez?
The UUT, I'm curious, so, wait, am I looking at the right text? Which is the one that had a variance because of the lawsuit?
Oh, franchise fees?
Franchise. So that was, it's $1 million plus variance. So next year, will our baseline from this year be about the same? Because the prior year is 3.1. Was that lower because of the way we were treating the funds because of the lawsuit?
Councilmember Dominguez, we actually did not budget for that 1% electrical fee, franchise fee. It's about $600,000 to $700,000 a year, and for the last 2 years we have not budgeted for it. So those were about $1.3 million in unbudgeted revenues. So next year we actually have already factored in the about $700,000 in our budget.
So it'll be about 3.7 million next year in our budget?
Next year it should be about, I'd have to look at it, but it's about 3. Yeah, it should be about 3.7 because it is not in the current year budget. Correct.
Okay, great. Thank you.
Any other questions? Okay, thank you. Ms. Tomaszewski?
Okay. Whoops. Oh, good afternoon, Chair Hart, committee members. I'm Jennifer Tomaszewski, the accounting manager for the finance department. And as Ms. Nemes stated, I will be going through the general fund expenditures, then the enterprise funds, and then the budget adjustments. So on this first slide, as I'm sure you're familiar with, we have this, the general fund expenditures are broken out by department. And the first column, we see the annual adjusted budget. So that's the original adopted budget, along with any prior year carry forwards and any changes approved by council throughout the year. So we see that's about $132.5 million compared to the actual amount spent. And again, this is preliminary numbers. So actual about $127 million. For basically the next column is the variance, so the difference between the two. So at the preliminary year end, we see about a $5.5 million savings from the adopted budget or from the adjusted budget. And now I'm just going to hit a couple of the highlights. So we do see that police make up about almost $2 million of that variance. And as reported in prior quarters, this is as a result of their ongoing efforts to recruit and fill vacancies. We do know, I think at third quarter we had about 16 vacancies. Since then, some of the dispatcher and citation officer positions have been filled. 7 or 8 police officers positions will be starting the academy in October. But at the same time, they also anticipate there will be some retirements this year as well. So we will continue to monitor this, but this, at least in the short term, will continue to be the trend. Next, I wanted to point out fire. We see that fire is actually over budget by about $1.3 million, and this is actually a combination of a couple things. First, as Ms. Nemes was talking on the revenue side with the mutual aid, the department tends to be conservative in budgeting for mutual aid because it can fluctuate so much from year to year, and I think they base it on a 3-year average. And this was a high fire season, so with that, about $900,000 of that makes up additional mutual aid activity. And the remaining of that is a combination of 3 other factors. We had 2 overfilled positions that were filled but not budgeted. There were some vacation payouts that were also not budgeted. And then we have a unique thing with our pension with the CalPERS. And what this is is CalPERS changed the way that they charge for contributions, and it's a little complicated in that it used to be that every dollar of salary that was paid, we would pay a percentage to CalPERS for that covered payroll cost. In the last couple years, CalPERS has been changing that for their unfunded liabilities, and now they invoice us for about half of that. So regardless of what our covered payroll is, we pay that check, and then so it doesn't all run through our payroll. So it was a little bit tricky to budget for in this kind of in-between year. We've since changed how we budget for that, and we've corrected that going forward. But because of that, we were slightly under budgeted on the fire pension costs as well. So those are the main contributing factors for that, and I will be looking at this one again when we get to the budget adjustments. And then just last, I just wanted to point out, we see Public Works, Parks and Recreation, Library, Community Development, the continued theme of savings from vacancies. So again, just to recap, we see that the surplus, or not the surplus, the savings of about $5.5 million in our expenditures at year end for general fund. This doesn't mean this is the amount going to reserves. We have to net that against we had also budgeted for about, I think, $2.3 million in our revenues for the anticipated year-end reserves, so that we need to account for that. We have almost $1 million in carry forwards, and we are also still closing the books. We don't anticipate that number is going to fluctuate much, but we will be, as Julie or Ms. Nemes stated, we will be bringing the reserves back in October. Next, I will be going through the enterprise funds, and similar setup to the last slide. We actually broke this up into 2 slides this time so you can actually see the numbers a little bit better. So here we have solid waste, water, wastewater, and downtown parking. So I just wanted to discuss a few highlights. So first, we see the water fund ended the year with about a $2.6 million surplus in revenues from budget, and this is actually made up of there's 2 main drivers here. First, about $1.1 million of that is as a result of increased revenues from metered water sales, and the main driver here is the replacement of the water meters. I think at year end, they estimate about 14,000 of the 24,000 meters that have been replaced. It has substantially reduced system losses. And then the other factor being about $1.4 million in additional buy-in and tap fees due to development in the Upper State Street area. So on the expenditure side, we see that our expenses have a savings of about $9.6 million. And this is actually made up of quite a few moving pieces here. The largest being the desalination facility. There are savings of about $3.3 million due to delays in the operation. So there's significant savings there. In addition, about $1.5 million reduced cost in water purchases. I think in this case, I think it's my recollection that the water costs were conservatively budgeted, and the actual cost came in lower. And there was also almost $1 million in salary savings, and then another $1 million in chemical costs that were anticipated to come in, that there was additional savings there as well. And then the remainder is just spread over the rest of their operating budget. So there's a lot of moving pieces in this one. On the wastewater fund, kind of tracking similar with the water fund, there are also savings of about $1.6 million. And this is also made up of several factors, the 2 largest being there was some salary savings in wastewater operations, and there were also several budgeted costs for equipment and operating maintenance that were rolled into the CIP program. So those are the 2 largest factors. And then on the next slide, I just wanted to quickly highlight the remaining enterprise funds being airport, golf, and waterfront. And airport ended the year with about $1 million savings, and about half of this is related to salary savings as well. The other half is spread over services and supplies. One of the items here is about $227,000 that was originally anticipated to be spent on the runway rehabilitation project, if I'm saying that correctly. The runway rehabilitation project. The project was delayed, and they will be bringing that back to reappropriate that in 2018. And then lastly, the waterfront fund, they had about a $1.1 million savings here. This is also because of several factors, the two largest being salary savings, and then there was a delay in the marina management software implementation, so there's credit card processing fees that there was savings for that. And then I think about $200,000 of this is just timing differences on the spending. They'll be carrying that forward into next year's budget. So that's it for the enterprise funds, and I can either answer questions. Do you have any questions before I move on?
Any questions for Ms. Tomaszewski? I had a question about the library expenditures. That seems like that is the outlier percentage-wise on the salary savings, and so I imagine that means just more vacancies for the library. Is there anybody here from the library that could speak to that? Is that something unique to them?
They've had salary savings for the last couple years. I do know that the majority of that is because of salary savings. I can follow up on that. I don't have any more details at this point, but I can definitely get that information for you.
I'd appreciate knowing that. Thank you.
Okay.
Anybody else with questions? Councilmember Dominguez?
I've had a book out for about a year. I think it could be the fines.
Not on the
Just kidding.
expenditure side. Councilmember White, did you have
The fire department.
That one.
The mutual aid, so is that something that we have more expenditures than revenue?
No, it's actually the opposite. We have more expenditures. Let me back up. So when we budget for mutual aid activity, we tend to be very conservative with that because that can fluctuate so much. So the budget on that is usually very low, and then at the end of the year, if it goes above that, we bring in the revenues and the appropriation budget to match that, so they're not over budgeting for mutual aid activity every year. And in this case, we were over about $900,000 on mutual aid activities, but I believe mutual aid revenue was about an additional $1.1 million, 1.2 million.
So wouldn't that lead to a smaller variance?
But there were other items in that variance this time that also accounted for that, such as the overfill positions and the pension costs and some unbudgeted vacation payouts. So it's not all when we look at that 1.3 million, we have to look at about 900,000 of that 1.3 is due to mutual aid, and the remaining is overages for the other factors.
So really the variance was 2.1 million, and the 900,000 in mutual aid brought it down?
So in the budget adjustment, what we're asking for is to appropriate the additional revenues that were received along with the appropriations to cover those additional costs, because we did bring in more revenues than the appropriations. However, and I'll explain that when we get to the budget adjustments, we're also asking for about another $50,000 that is not covered by those revenues. But we think that we aren't going to need that. So if you want, I can explain that. A lot of that is giving ourselves a little bit of a cushion as we're going through these final closeouts for the year end. We need to be under our appropriation authority, so we can't spend more than we have budget for. So this is to correct for that and also give us a little bit that I think when we get to the budget adjustments, you're probably referring to the other $50,000 that we're also asking for from reserves, but we don't think we're really going to need it, if that makes sense.
Well, I'm not asking about budget adjustments.
Okay.
I'm just trying to find out. So, and let me back up. Maybe that'll make it clearer. So in a normal year, you're saying we look at kind of a 3-year running average in terms of our budgeting of mutual aid.
Correct.
So we're looking at, we come up with 2 numbers every year, what our revenue might be and what our expenditure might be. Is that correct?
Correct.
And generally the revenue number is bigger than the expenditure number?
Yes.
So it is not a money-losing venture.
Correct.
So this year we had a lot more mutual aid than in the normal 3-year cycle.
The last couple years, the mutual aid activity has been higher than in prior years.
So wouldn't we have a bigger revenue over expenditure gap, or more revenue than
We do.
expenditure?
The expenditures are about 900,000, and we're asking, and the revenues are about 1.1 million. Both of those over budget. So appropriations are.
I'm sorry, could you say those numbers again? The revenue was how much?
The revenue, just for if we're splitting it out for the mutual aid activity alone, it's about another 1.1 to 1.2, somewhere in there, million. And that covers $900,000 of additional mutual aid expenditures. But we're also asking for the remainder of that revenue to cover the other costs that weren't budgeted.
So that's about a $300,000 difference.
Yes.
So what was the 900,000 number you gave me earlier? That was just
That's
expenditures?
That's if we're looking at this 1 point, and let me go back. That's if we're looking at total expenditures over budget. And that's about 1.28.
But mutual aid isn't over budget at all. It's actually under budget.
No, it's if you look at that 1.3 million number, 900,000 of that is because of mutual aid activity. So it's over 1.2, 1.3 million, and part of that, a subset of that, is mutual aid overages.
So this number is in parentheses, meaning there's more expenditures than revenue?
It means that there's more expenditures than budgeted.
Okay. So
We really have to look at the revenues in a
so the
separate.
revenues isn't
no.
involved here. Okay.
We have
so
to.
even though there's 900,000 more in expenditures, we've more than covered it with the revenue.
Correct.
Okay. And I was concerned because the negative 5% on the end is much bigger. In fact, I guess it's the only negative variance out of this list of departments.
And typically we see that every year. Every year we come back. We always know that we're under budgeting for mutual aid activity because it fluctuates so much.
Mm-hmm.
And then in fourth quarter we reconcile that, true
Okay.
that up.
So once you add in the 1.1 million in revenue, this number pretty much shrinks down.
Correct.
Okay.
And we will see that again in the budget adjustments.
Okay. Thank you.
Councilmember Dominguez, if I could just jump in for a second. We do show mutual aid separately on the revenue side and the expenditure side. So on my revenue presentation, on intergovernmental revenues, it's a section of other revenues. It is right now showing as additional revenues over budget by about $1 million, and that is due to mutual aid revenues exceeding budget. It was budgeted at about $600,000, and it is coming in at about $1.2 million. So a lot of that variance is due to additional revenues, and that's why we do show expenditures on the expenditure side that's coming in over budget, because both the revenue side and the expenditure side were budgeted lower and both came in higher. And there's always more revenues than expenditures because they bill for all of the costs plus an admin fee that gives that additional revenues over expenditures. Okay. I hope that helps.
So that is the intergovernmental category?
Correct.
Is there anything else in that category, or is that?
Yes, there are things other than mutual aid. Mutual aid's a large part of it. We have about 1.2 million in there, and of the 2.1, but it's a good part of that 2.1 in actual revenues.
Okay, great. Thank you.
You're welcome.
Councilmember White.
Thank you, Mr. Chair. Can we get a little take on the golf fund, just of how that's doing, just a check in on how that's going, please?
Chair Hart and Councilmember White. Yes, so the Golf Fund had a challenging financial year, I would say that, and lead with that because, of course, this is a Finance Committee. And the numbers that you see before you show a significant adverse variance in revenue and a significant saving in expenditure. So similar to the conversation we've just had around mutual aid being higher, a lot of the revenue shortfalls were saved in reduced expenditures. From a play and a golfer experience standpoint, I think the feedback has been exceptional. Everyone's very happy with the quality of the golf course. Everyone's happy with the transition and how that was managed. The staff who decided to stay in city employment were successfully transferred across to the general fund. And a number of savings were made with regards to that transition as we were able to absorb those into the general fund headcount. It's fair to say that the revenue shortfall is in two parts derived. One is operational play. We've had conversations during budget presentations around how weather has impacted play levels, and we've had obviously a lot of storms through the winter. And the other major part of the revenue shortfall was the fact that, from a good news standpoint, the Golf Fund didn't require new debt. So within the budget, we assumed $180,000 of new debt from the general fund if the golf course was unable to pay bills from its cash flows. We actually had a very good year in terms of making savings, and didn't require the use of those additional funds. So of the 380, I think it is, shortfall in revenue, 180 of that is actually no new debt. So that, of course, will then have a saving ongoing of no requirement to pay it back or any interest. So my take on it personally is that I think it's been an 8 or an 8.5 out of 10 in terms of the operation, how the golfers feel about it. And I think the financials will continue to improve. We've seen, since we've had uninterrupted play from rain and other events, growth every month, year over year. And this fiscal year, looking like it's starting about 10% up from last fiscal year. So I'm confident that it's growing. But of course, there's always that temptation to be too confident when you set your budget for revenue targets and round growth.
Well, that sounds encouraging. I know that, this has been a big disruption, and that I'm glad to hear that you're encouraged. And if you're encouraged, I am too.
Thank you.
Thank you. Thank you, Mr. Chair.
Any other questions for Ms. Tomaszewski about the expenditure side of the budget? Okay, let's move to the budget adjustments then.
Okay. So just to continue with the fire department conversation, here's the budget adjustment I was referring to when we were discussing the expenditures. So we actually brought in about 1.2 million of revenues above what we had budgeted for fire. So we staff are recommending receiving or recognizing that revenue and the appropriation to match that. And with that, because we're also closing the books and we don't want to just say this is exactly the amount, give ourselves a little bit of room so that we are still within our appropriation authority, knowing we're probably not going to need that, and that'll fall back to general fund reserves at the end of the year when we actually know the final numbers. So, and I should quickly say, last quarter we decided to not go through every single budget adjustment, so we are going to continue with that. So on the next slide, I do just quickly want to reference a few adjustments that you're going to see on several of the upcoming slides. There were two things that in closing the year, we had 3 disaster funds from fiscal years 2007 to 2009. So the T Fire, Jesucita Fire, and the Zaca Fire, that it's taken quite a while to reconcile all those costs and get all those claims and the reimbursements back. And with that, now we're ready to close those funds. So there was some residual amounts in those funds. So in order to do that, there's several funds that we're transferring those monies back to. So it's really just cleaning up those funds so we can close them. So that's one of the themes we'll see throughout these slides. The other area is with the Public Works and the community development technology fees, as well as with the Excella and Tidemark project. because of this is a pretty complex project in the fact that it's funded by future technology fees, and was so the IT Capital Fund loaned some of that money up front to do the project sooner. And with that, at the end of each year, we have to true up those balances based on the actual revenues that come in, and and the loans that are needed to get all those balances correct. So you're going to see several adjustments that relate to that as well. So, and that's what you saw on that last slide. This is also a continuation of the 3 disaster funds. And on this slide, this is just these are just several small cleanup recognition of some revenues and appropriations for some small grants. I do want to reference these two on this next slide. This first one relates to the Streets Capital Fund, specifically the overlay project. In this case, there were 3 bridge projects that would have been funded by the sale of, I believe it's 20 West Mason. And due to the timing of those projects, the funding was borrowed from the overlay project. Since then, the property's been sold, and so this is to reimburse the overlay project back. And on the next budget adjustment for the Streets Grants Capital Fund, this relates to the Mission Canyon Bridge Rehabilitation Project. And in this case, the city received grant funding for $885,000. And normally staff would bring these budget adjustments when they actually award the contract for this was for the design phase of the project. The RFP went out and there were no proposals received. When staff went to do the second RFP, there were additional costs and administrative costs and engineering costs incurred. Therefore, staff recommend that we receive that revenue and the appropriation for fiscal year 17. And with that, a consultant was selected in the second round, and staff do anticipate awarding that contract later this year, fiscal year 18.
Councilmember White?
So when will we be hearing an update on that project? I'm hearing design. I thought we were still in a planning phase on that rather than, we still had choices to make on that. Hi.
Michelle DeCamp, Public Works Business Manager. And my understanding is we have this scheduled for November of 2017 to bring it to council for discussion and award of, I believe, just the design. This is just the engineering design phase. That's all.
Okay. All right. So, and I thought we still had some more planning work to be doing there. So, but in November is when we'll be hearing about that.
Yes.
So that's coming
and
right
I
up.
can ask that question too and follow up with all of you.
Great. Thank you.
Okay, so on this next slide, the only one I really wanted to bring to your attention relates to the Water Drought Fund and the Water SRF Loan Fund. And we have brought a similar adjustment earlier this year. This is, again, just a cleanup item. When costs are incurred, there were some costs that were incurred in the Water Drought Fund, and then subsequent reimbursements received to the SRF fund. So this is just to match the costs with the reimbursements. And then on the last slide, this is also another cleanup item, but it's because it's such a large amount, I wanted to point that out. And in this case, this relates to the Airport Operating Fund and the Airport Development Fund for the sale of the Hollister property. And in this case, the fixed asset itself resided in the Airport Operating Fund. However, we received the revenues for the proceeds for the sale of the property in the Development Fund. And really what we should have done is received it to the Airport Operating Fund so we could dispose of the asset and then transfer the money. So this is really just a cleanup item to correct for that. And with that, just to recap, staff recommend that the committee accept the interim financial statements for year end and approve the proposed budget adjustments. And we would be happy to answer any questions.
Are there any questions for staff? Councilmember Dominguez? I thought, well, Councilmember White then.
Thank you. I would appreciate hearing back soon on one of our bugaboos out there, which is the sales tax and how that's obviously in a troubling longer-term pattern. So just to get more feedback on what you folks are hearing, what your antenna are telling you, just to obviously patterns and information that you might be receiving through your networks on that.
Any other questions?
This is kind of a boring technical accounting question, but I'm curious. The second column, we're showing increase in estimated revenues for most of these situations, but the first column is an increase in appropriations. So why wouldn't it be an increase in expenditures or something else? What is the appropriations category, and how does that fit into this?
Committee member Dominguez, which budget adjustment are you referring to?
Well, pretty much all of these, we show an increase in revenues and then a corresponding increase in appropriations in the same amount in a different category. So I'm just curious what the appropriations category is. I mean, assuming we're appropriating money to spend it.
Well, for example, if we get extra grant funding, we would increase the estimated revenue and then increase the corresponding appropriation, allowing the authority to utilize the additional revenues. Is there a specific question? I'm not sure I'm
That's
following
really the
your...
question is, why are we doing it? It seems like we're creating extra work if we're just increasing it in both categories every time. And that's just a requirement to show we're spending it in that particular category.
Well, yes, but then it's also, we have to spend within our appropriation limits. So, okay.
Hi, Bob Samario, Finance Director. So our budgetary accounts account for the expenditure side, which we call appropriations. That's the Appropriation Authority. And on the revenue side, the budgetary account is an estimated revenue. So when we look to spend money, we always look to what the source of those funds are. It's either going to be additional revenues or it's going to be reserves. So if we know we got additional revenues, we're going to do a corresponding entry to the budgetary account that we call estimated revenues. Otherwise, it's going to come from reserves. So this just indicates that it's a balanced transaction from a budgetary perspective.
Right, and what I am assuming, and maybe it's not incorrect, or maybe it's not correct, you basically want to adjust the budget because you want to show people who are watching that there were big adjustments that were made and not kind of do them behind closed doors. You want people who are relying on the budget documents to have faith in the budget. So if it's a big ticket item, you want to do an adjustment.
Yeah.
So,
well, but more importantly, I think
my question was really just about why we call it appropriations and not expenditures.
because it is an authority. The appropriation is nothing more than an authority to spend money. We need authority from council. We can't spend a single dollar unless council gives us that authority, either through the adopted budget or through amendments like we're proposing here. So the appropriation is really the authority for us to spend money. Mm-hmm. So I mean, we can't spend anything.
So why wouldn't you adjust the expenditure, say for fire, where we said, okay, we're bringing in, the $1.2 million, and we've shown that in the increased revenue. Why wouldn't you go back and adjust the general fund expenditure for fire upward by the $900,000 extra dollars we actually expended?
Because we don't need to adjust that, because that's just done through transactional activities. So when we run payroll and we incur these costs, that's already occurring in our actual expenditures. The budget side of the things has to give us the authority to do so. And sometimes for these things, we kind of come after the fact. We know we've had these mutual aid expenditures funded from mutual aid revenues. And so we know we have a balanced sort of thing going on. We're not using reserves or presuming to use reserves. So sometimes we'll come after the fact to true up the budgetary accounts to show that, yeah, we still need that budgetary authority on the appropriation side to cover those costs, but it's being funded from revenues through mutual aid, and we'll adjust the estimated revenues accordingly.
So if someone goes back a year or two from now and looks at this budget, they're going to see the revenues with the extra amount because we've adjusted it, but the expenditures will still be way down here.
No, actually, the expenditures, again, we incurred $900,000 more in expenditures than we had planned. So we need appropriation to cover those. So we have $900,000 more in actual expenditures, and also the budget reflects that. The revenues are
So
the
the budget
same.
will actually change to conform to the actual expenditures. Okay.
Absolutely. On the expenditure side, always, because we
And
have
the
to have
revenue
pro-
doesn't?
We typically would budget, but we can have a revenue come in one year, and if we don't need to spend it that year, we might just leave it there and we'll bring it the next year as an appropriation authority because when we want to spend it. So there isn't that requirement from the revenue side that we have to adjust the estimated revenue account, but certainly we want to spend money on a given year, we have to adjust the appropriations for the authority of that.
Okay. I just thought I would ask because it struck me as asymmetrical, and I always wonder why, if there's a reason why we do it a certain way. And I'm sure it's accounting guidelines that mandate that, but I was just wanted to ask while it was on my mind. Thank you.
Sure.
Are there any comments or questions from members of the public? Okay, well then I just want to thank Ms. Nemes and Ms. Tomaszewski for the report. And is there a motion to accept the financial statements and approve the proposed budget adjustments?
I would be glad to make that motion. Mr.
Councilmember
Chair.
White and seconded by Councilmember Dominguez. All those in favor say aye. Oppose and abstain. The matter carries unanimously, and we are adjourned. Thank you very much.
Thank you.